everybody's got to have their eye on the longer term prize, which is, the $39 trillion of debt, deficits running at 2 trillion. And I had a chart, I just looked at a chart that showed that, if things get worse this year, they're going to clearly be much more than two, because the war is expensive. Um, there's no way they're going to get by without putting the money. It's just math.
Mhm.
so, and when that becomes apparent, then these things are going to really catch wind in their sails again. And I think, there are a lot of people calling for $200 silver. I believe it. I mean, I believe $6,000 or $7,000 gold. I believe $200,000 Bitcoin.
Most people in this space are looking at the next green candle. They're looking at the Fed's next meeting or the next CPI print. They are missing the structural collapse happening behind the curtain. That was Larry Lepard. He manages a fund that was up 175% last year. He's not a moon boy and he's not a doomer. He's a mathematician looking at a system that has run out of exits. Larry just pointed out that U.S. debt just crossed $39 trillion. Interest alone is over $1 trillion a year. Here is the nerve-wracking part. Larry tracks a specific chart, the growth of the money supply versus the growth of the debt. In 2008, those lines crossed. They printed trillions. In 2020, they crossed again. They printed trillions. He says they just crossed again for 2025. But there's a gut punch coming for anyone holding a standard stock portfolio. Because the move the government used to save us in the 80s, it's mathematically impossible today. Watch this carefully.
And if you look at, a good way to look at it, let's look at the 70s, Adam. In the 70s, the two best, and this is how I got into this trade. When 2008 occurred, they started printing money like crazy. And I said to myself, good God. And I had some money saved up because like you, we were both in the dot-com thing and we made some money on that. And so I said, okay, I got this money, but I don't want it to, I'm young enough that it's going to last a long time. And I looked at it, I said, this, QE came along. And I was like, what? They're printing money and, zero interest rate. What? You can't do that. So I said, all right, we're going to have inflation. So I studied inflation. I went and I looked at the 70s. And if you look at the 70s, the stock market was basically flat for 10 years. And the two areas that performed the best were gold stocks and oil stocks. They compounded at close to 30% a year, both those categories, because of the inflation in the 70s. And then Volcker came in and he solved it. And he was able to solve it because he took rates at 20% and debt to GDP was 35%. And so he could solve it.
Did you catch that? In 1980, the Volcker Fix worked because the debt was small enough to handle 20% interest rates. Today, at 125% debt to GDP, a 20% interest rate would bankrupt the United States government in weeks. There is no Volcker coming to save your purchasing power this time. So, what does a man who saw his fund go up 175% do? He doesn't look for the next meme coin. He looks for sound money, the things that cannot be printed. He is looking at gold, silver, and Bitcoin. Larry calls this the big print. We aren't there yet. We're in the little print phase, about $40 billion a month. But when the correlation of one event hits, when the market sees up like they did in 2008 or 2020, that 40 billion will turn into trillions. In that moment, everything sells off. Bitcoin might hit 50K or 60K briefly. Gold might dip. That is the final margin call before the floodgates open. The question isn't whether you believe the hype. The question is, do you believe the math? Because as Larry says, the math doesn't care about your portfolio.
But I can look at the math pretty clearly and I can see the problem. And, how does this get resolved? I mean, there is another choice. They could let everything collapse. They could let it be a 1929. But do you really think that at the end of the day, faced with that, they're going to do it and they're not going to print? I mean, I don't.
Would any sitting politician or central planner let that happen on their watch? No.
No, they just can't. So it's to me, it's an interesting trade because you can be very highly confident you're right, but you got to be patient.
Right. And to be honest, guys like you and I have been in the sound money trade.
Oh yeah,
15 plus years.
A lot of times it looked like we were dead ass wrong. But now, now it's kind of events are kind of proving us generally right. But the slope of the curve, the timing of the events, all that stuff, it's hard to know. It's very hard to know.
Okay. So I do want to ask you about the Fed under Warsh, but just
Yeah.
let me go
Okay,
through
yeah, we can take that.
the other two assets. So silver, much more speculative, but it
Yep.
also has much more commercial use.
Yeah.
I talk to Andy Schechtman frequently on this program. Not
Great.
sure how well you might know him, but
Yeah, I love him. He's great.
a great guy, right? And super, he's there in the trenches, right? He's there watching ounces move all the time,
Yep.
and he remains gobsmacked by the amount of flows of silver, both coming into the COMEX from the LBMA, but also that's been then getting removed from the COMEX because people are standing for delivery. Right, at highest levels of his multi-decade career.
London too, same story. I mean, the London exchange is down to air fumes, right?
Yeah, and so in a lot of these cases, he's like, look, I'm trying to think who can take delivery of that many ounces and store them, transport and store them. That's not like a state actor, right? It's not like a sovereign nation, right? So clearly, there's still a ton of and it hasn't diminished with silver coming down from 120 to 60 something. Yeah. Those flows have not diminished, and so I guess the question is in your mind, what's going to give here? Is it going to be the demand is going to level off because silver is now stuck at a lower price? Or, silver's eventually going to have to react to say, look, the stores are almost, they're not quite drained yet. I don't want to be hyperbolic about it, but there is so much more silver being taken out of the exchanges that.
Yeah. I think what Andy and a lot of the others, there are a lot of great monetary analysts and people who dig into all those flows very carefully, and I follow all of them. I think at the end of the day, the paper market is collapsing and it's going to come down to being a physical market. Mm-hmm. And you can't print silver. And so, the price discovery is just going to lead to higher prices. We've already seen, a real gap between the prices in the West, the US, and the prices in China. And, it's getting used heavily in China. That's the thing. The thing about silver, it's really neat the way it's kind of a dual use metal. One, it's got this monetary property of being scarce and being kind of a cheaper form of sound money than gold. But it also gets used in solar, particularly. And, the current estimates are that, China in a few years will absorb 50% of the annual silver supply. And we also know from all this, looking at the statistics, that they've been running a silver deficit, for 3-4 years at least, in terms of we've been, more silver is being used in industry than we're mining. And so, eventually that's got to give. And I think that's what initially broke us out of the $50 price cap, which had been in place for a long time, well, really forever. We'd never been above 50.
And had barely ever been at it too, just
yeah, right. We were only at it briefly. We were at it with the Hunts, and then we were at it in 2011. And so, you've got an enormously long base of silver prices under 50. We broke through it. And typically anyone who studies commodities and commodity trading patterns knows that, when you break through a 50-year ceiling, you don't just go up 50%, which is what we are now. We're at 75, up 50% from the 50s. You go up multiples of the ceiling you broke through. So and the silver to gold ratio has been coming down, and it could go down a lot further. For much of history, the silver to gold ratio is about 15%. So, 15x. So, and that, by the way, is geologically what's going on in the world. We mine about 15 ounces of silver for every 1 ounce of gold. And so, silver can easily be, and has in the past been, 3% of the price of gold. So if gold's at 5,000, silver should be at 150. We're at 75. And, I think gold's going to 6,000 or 7,000. So 3% of that is, 180. And, there were on peaks, silver's been 6% the price of gold. That's closer to the 15 ratio. So,
if you're still watching, you now have a clearer view of the next 5 years than 99% of the people on Wall Street. Larry just laid out the death loop. Think about it. The government needs to borrow more money just to pay the interest on the money they already borrowed. That is the definition of a Ponzi scheme. And when the system inevitably chokes on that debt, like it did in 2008, like it did in 2020, the Fed has to step in and flood the world with new dollars. This is what Larry calls the big print. But here is the shock value that most people don't want to hear. In that scenario, Bitcoin isn't just a tech stock. It's not a risk-on asset. It is the only global, neutral, mathematical fire escape. Larry's fund was up 175% because he stopped betting on growth and started betting on the failure of the printing press. When the big print hits, $100,000 Bitcoin will look like a bargain. $500,000 Bitcoin will look like a mathematical certainty. So what is your move right now? Stop measuring wealth in dollars. Start measuring it in ounces and satoshis. If the denominator, the dollar, is infinite, the price of finite things goes to infinity. Prepare for the volatility trap. There will be a moment where everything drops. Don't let the correlation of one shake you out of your position. That is the elite's last chance to buy your Bitcoin for cheap before the printer goes into overdrive. Trust the math, not the narrative. The media will tell you everything is fine. The debt clock says otherwise. Larry Lepard has been right about every major print for the last 2 decades. He is telling you the biggest one in human history is currently loading. We're making a series of these videos to track exactly how this big print unfolds and which specific altcoins and Bitcoin proxies Larry is adding to his fund right now. You cannot afford to miss the next one. The math is already decided. The only variable left is you. Subscribe, turn on notifications. We'll see you in the next one.